we're just getting a red alert right now that the Greek banks are extending their holiday. So it continues, right? They're waiting to see what the troika really is going to work out with Greece. And, you know, I want to just point to one of the tweets you sent out immediately after the referendum. You said, result of referendum reminiscent of the famous network clip, mad as hell, and I am not going to take this anymore. So is this mad as hell right now, Mohamed?
Oh, yeah. I mean, by voting no, 61% of the voters in Greece made it very clear that they want more understanding and they want to be heard in Europe. So they are as mad as hell. The fact that the banks are going to remain shut even longer is going to make them matter. And importantly, it is making the economy grind to a halt. And that has implications for the negotiations, Betty, because it means, first, the Greeks are going to have to do more in terms of reforms. Secondly, the Europeans are going to have to do more in terms of debt reduction and in terms of immediate financing. So it complicates negotiations that already were pretty complex.
And they are very complex. And it looks like basically, you know, the economy is ground to a halt. As I mentioned, we've extended those bank holidays until Wednesday. The capital controls stay until then as well. I mean, how much longer can the Greece economy just kind of stay still like this?
Not much longer. I mean, economic activity is collapsing, and with that, tax revenue is collapsing. So it has a vicious cycle to it. The Greek banks can only open under two conditions. Either the ECB increases its support through the ELA, so the ECB gives more money to the banks, or alternatively, you get some new currency introduced that recapitalizes the banks internally. That's the only two conditions under which the banking system can reopen and function even semi-normally.
Mohamed, I'm wondering if you can describe what a trade or an asset class that is unlooked and unloved right now. Everyone's focused on Greece. There must be other things that are available for investors but are being overshadowed by events in Greece.
So if we continue down this road, it is a road that leads us to Brexit. If that happens, then you should expect a spike in global risk aversion, and then you will get a sell-off in virtually all markets. At that point, good opportunities are going to be created. And those opportunities really are name-specific. They rely on the ability to generate lots of cash, so the internal resilience. And they also rely on a set of good fundamentals. So you can see a number of U.S. stock names. You can see some peripheral bonds in Europe. You can see some emerging market, some corporate bonds. There's going to be lots of selective opportunities, but not just yet. We are still on a pretty bumpy road, and I'm afraid that there are still some nasty bumps ahead.
We're literally right in the thick of it. And, Mohamed, you can't see this, but on Bloomberg right now, we're showing pictures of Varoufakis. This is not live, by the way. These are just video of Varoufakis after his resignation. And you also, you know, you're quite active, obviously, on Twitter. Lots of people follow you, including me. You said naive for creditors to celebrate Varoufakis' resignation. Should Greece compromise be possible, he would have helped to secure required domestic buy-in. But what about this new guy, Escalates? I mean, do you feel that way still, knowing that he's now the finance minister?
So he's been involved in the negotiations, and he has better working relationships with Europe. So both these things are positive. Varoufakis will be missed for many reasons, one of which is that had he gotten to a deal, and in particular, had he gotten the debt reduction that Greece needs from its creditors, then he would have been able to turn around and sell it internally quite credibly. Now that's going to be harder to do. And remember, his statement going out was very explicit. He posted on his blogs the reason why he was going out was because the creditors no longer wanted to work with him. And then he said, quote, that he was happy to wear the creditor's loathing with pride. He wears the creditor's loathing with pride. So that's quite a strong statement.
Were you somewhat repelled by that comment?
No, I wasn't at all repelled. I mean, you know, he has been pursuing a point of view that has quite a bit of economic logic behind it. He did it unconventionally,
right,
and that didn't go down well in Europe. But I think his point is one that's supported by lots of economists, which is that Greece fundamentally needs deeper debt reduction.
Mohamed, what would you be whispering in the ear of Angela Merkel today?
I would say to her that, first, please don't follow what the Eurogroup president said yesterday, which was that the outcome of the vote was regrettable. That's not the thing you should say to a nation that voted 61% in a free election. Mm-hmm. Rather, it's time to hear what the Greek people are saying, and then make one of two choices. The first choice is, can this Greek government, in her opinion, deliver on structural reforms and more intelligent austerity, yes or no? And secondly, is she willing to push the rest of Europe into providing a lot of money up front and deep debt reduction? If the answer to either of these things is no, then they all have to move to plan B rather than prolong what is a very costly process. Remember, I go back to Greece is basically shut down, and the longer that lasts, the harder it is to rehabilitate it once the conditions allow for that.